Can you break down the data for us and what this actually means for the BOE?
Yes, sure. So today we got a surprise reading on the wage growth, which is actually the most important data detail in the release. It came in, it had been falling fast, so that would have been good news for the BOE. But it came in, it fell to 6.2% in the last 3 months of the year, and we and the Bank of England were expecting it to fall to 6%. Now, that obviously lifts the risk that the BOE acts a little bit later than we expect. Our base case was that they were going to cut rates by May, but for the time being, we're sticking to our view. Yeah. And the reason for that is because we essentially think that out of all the data that's coming over the next week and over the next months, the most important one is inflation. Because essentially, if you get headline inflation down, that feeds through lower inflation expectations, and that will feed through to lower pay demands.
So, and we get CPI tomorrow. I guess the concern for the Bank of England, and we were following that decision last time with the press conference, is that we also don't know when on March the 6th the Chancellor comes up within his budget, and that could have inflationary pulses.
No, definitely. I mean, what the inflationary policies of the budget will largely depend on the sort of tax cuts that we get. Because as we've seen in the previous budget, what we saw was like a big chunk of tax cuts, but because they also stimulated labor supply, then they weren't so inflationary. So that's what the BOE will be looking for. But now with inflation coming in tomorrow and ahead, I mean, tomorrow we're going to get a slight tick up in inflation, which will be sort of an awkward reading. But what matters is what inflation does next. And until May, we still have 3 readings of inflation. If it comes in line as we expect, that means that headline inflation will be undershooting the 2% from spring. And that should give the BOE enough reason to start easing its policy a bit.